The majority of hedge funds are positioned offsides when it comes to the equity market, and you have the Nasdaq already making all-time highs, and the S&P 500 literally less than 0.25% away from breaking into all-time highs too. We spoke about the potential of a short squeeze once we start to see the stock market moving into those all-time highs. In today's show, we'll discuss the possibility of that, the likelihood, and when it may actually take place, and what it means for Bitcoin next after that short squeeze actually does occur. So smash the like button, hit the bell notification, and subscribe to the channel. Here it is, S&P 500 and net non-commercial futures percentage open interest, basically showing you that the non-commercial traders, which is going to be hedge funds, large traders, where are they positioned in the market right now? Well, this is their lowest positioning in 12 months, meaning that they're not allocated, which is a twofold thing, right? It's the lowest equity futures in 52 weeks, basically in an entire year. What this means is when the stock market does break into all-time highs, any dips that occur after that will likely be bought up by these guys, which means that you're probably going to continue that trend. And that's coming out from one of the legendary traders from Fundstrat, which is Tom Lee. So what does it mean for crypto? Well, if you look at crypto over here, the expectation that we've said is that crypto catches a free ride alongside equities due to the natural correlation, but that doesn't mean that you should ignore some of the high time frame signals, which are starting to turn, right? We'll have a look at that as well. It just means in the short term, well, we'd expect that crypto is going to catch a free ride. Bitcoin specifically following suit, especially since Bitcoin is trading very, very, very similarly to the stock market due to the institutional interest, which we'll also look at today. So some of the coins bouncing nicely. You know, on the weekly, a lot of the coins are still down in the top 100. If we go to some of the others, you know, the top 200, also a lot of the coins are still down. So in terms of recovery, well, it hasn't recovered really much. There's a lot of work that still needs to be done from the altcoin sector to reclaim some of those highs. And we'll look at the 12-hour timeframes today, also using the super guppy and indicator we haven't reviewed for quite some time, which makes your trend analysis very, very easy, right? So if the stock market breaks into an uptrend and into new all-time highs and moves into price discovery, we're looking to catch the trends. And this will make it easy for you to identify which are the coins that are actually in uptrends, which are in downtrends, and which ones are just simply chopping about. So again, guys, smash the like button. Let's get into it. Now, remember, seasonality-wise, it's typical that leading into the end of June, you typically see a little bit of sell-off. And this is for the S&P 500. It's taken over 20 years, the prior 20 years, and basically averages that data out. And then you usually have a little bit of a strong July, and then you taper off again into August. August seasonality is relatively bad for the stock market. But what that means is these guys are going to buy the dip. So if you do break out to new all-time highs, which I think you will, we've spoken about that a whole lot, then any of those dips that do occur are likely going to be held up by the offsides hedge funds. And consequently, that should provide some momentum later on in the year for the stock market to possibly continue higher. Now, I did say when this crash did happen, I said that I think that there's great risk to reward over here on the S&P 500, better than crypto, right? Better than crypto. Maybe it wasn't better than Bitcoin, but better than crypto for sure, having put in a pretty sizable move over there. And you can see the Nasdaq has tested all-time highs over there. If we go to the S&P 500, I mean, it's close enough. This is probably going to break into new all-time highs even as soon as this week. Let's review the daily time frame over there just to showcase what we had been looking at. And one of the signs, I'll just remind you once again, is trying to read the tape. It's always important to read the tape whenever there is a news-driven event like bad news. Ask yourself how the market reacts and what it does. And the bad news event occurred on Friday the 13th, the spooky day, right? Always Friday the 13th. Price comes down over there, holds this level, and then we had the attacks intensifying and the geopolitical tensions rising. But reading the tape, it told you that that wasn't breaking lower. Instead, you're putting in high lows over there, which made it inevitable that eventually this was going to squeeze through and break into new highs, which you haven't yet done, but you're literally 0.2% away from doing that on the S&P 500. So some higher prices should be in the making over there. We had a look at Tesla yesterday as well, now rejecting off that trend line. It'll probably just do a little bit of reaccumulation over here. Possibly it will come down as low as 298 if this is a proper rejection, and then probably melt through that trend line as well, trading alongside the stock market and moving in unison. Now, the reason that Bitcoin probably catches a free ride is because the same guys that are trading the stock market are also trading, of course, the Bitcoin market. And that is the likes of BlackRock, right? BlackRock buying up massive amounts of Bitcoin. Who is buying all the Bitcoin, right? IBIT and MicroStrategy, they are responsible for the majority of the purchases over there. And that's why you're seeing the CME futures open interest now rising above that of Binance, OKX, Bybit, all of the different exchanges. The landscape has shifted for crypto or Bitcoin. The landscape has shifted for Bitcoin. We now have the at least Wall Street suits who are trading Bitcoin massively in terms of volume, and that trend is what's creating Bitcoin to hold relative strength against the rest of the crypto market, and that's why we've seen a lack of a bid in the rest of the crypto market. So all in all, that short squeeze is still in play. If you look over here, you've seen a rise now in the amount of leverage that could be liquidated in the form of stop losses. $71 million will be liquidated if Bitcoin trades anywhere above $107,000. But I'll show you on the low time frames why you want to be very, very, very careful in the short term, and then also why you want to pay attention to once this next short squeeze occurs. If Bitcoin does break out to new all-time highs, specifically around that $120,000, $130,000 target, you probably want to adopt a little bit more of a cautious approach from that point onwards, right? So again, expectation would still be that Bitcoin's going to trade with the equity markets into new all-time highs in the coming days, weeks. But then you want to be relatively cautious over there. That will allow for the catch-up phase. So if Bitcoin catches up to what's happened in the price cycles, cycle 4 is last cycle, 2021. Cycle 3 is 2017, which we're actually most similarly tracking the 2017 cycle. Now, if we do follow the 2017 cycle, then you can extend that target, that $130,000 target. You can start to look for much, much, much higher prices, but that's at least something for a later date. Now, what we've seen as well is a huge rise in the daily active addresses on Coinbase, right? Base, they have Base chain, which is essentially a layer 2 on Ethereum. We've seen a massive, massive increase that's occurred there suddenly. And if we go back to our equity charts over here, what's pretty interesting is if you go all the way through here to Circle, remember Circle, the stable coin, of course, if you look over here, huge move up, and now it's started to come down aggressively. And if you look at that move down, it's already dropped 27% over the last 2 days, which is pretty significant. But if you look at Coinbase, well, Coinbase is up massively. So what exactly is going on over here? Well, Circle for the 13.65% at the time of this post that it was down, you had Coinbase up 13.1%. So there could be a little bit of a rotational play that's happening over here, moving from Circle or USDC into Coinbase over there, and consequently the chart is marking up aggressively. If we go onto a high time frame like the weekly chart, this is the potential outcome of what you're looking at. You have a measured move that could possibly take price as high as $656. Previously, I marked it off as a more conservative target off of the cup and handle. You guys may remember that. And I said, let's go from the orange line instead. If you are going from the orange line and you're considering that the breakout, then we can put another price label in to give you two targets. One would be the conservative target at 514, and the other would be the aggressive target, moving all the way up to all the way up to 656 over there. So that's coming off of a cup and handle formation, essentially breaking around that neckline right now. And if we zoom in just onto the daily time frame to really look at what's happening over here, you have the a possible pause or pullback if this does move up. This has been an aggressive move. So if you move up into the upper boundary of this parallel channel, I guess be a little bit cautious or careful over there. 388, somewhere around that region. You probably put in a little bit of a pullback, or at the very least, a little bit of sideways price action over here. Now, if this is a rotational game that's happening from moving from Circle into Coinbase, there's a lot of momentum that can come into Coinbase because this was huge volumes, massive market cap, big money that came into Circle. And if that begins to rotate into Coinbase, which seems to be the trend that's currently occurring, then that's how you can possibly reach these higher targets of 514 and the aggressive target of 656. And this is, we've spoken about this a whole lot. We've given so many long trades over here. I think the first one that we ever gave was the reclaim of this trading range, which would have been around that 45. And we've given this multiple times over the years as this has moved up. The most recent time that we gave an entry on this was over here There you go, going into the fair value gap on the weekly time frame, testing that around the 200-day moving average. And the reason why is we said that Coinbase is essentially the picks and shovels. Instead of looking for gold, sieving through all the different gold mines around the world to try find gold, it's the equivalent of just buying into an actual gold mine and buying into that stock, which is going to go up. So instead of trying to find the best altcoin, or sometimes altcoins aren't even traded, right? A lot of the institutions are buying their crypto through Coinbase. The likes of these major players like BlackRock, like MicroStrategy, a lot of them are buying their crypto through Coinbase, through OTC, through the institutional desk. And consequently, you would expect that the stock will eventually go up. And therefore, you don't have to try and pick your favorite altcoin, which probably goes down, right? What are your chances of getting the right one amongst 2, 3, 4 million different altcoins out there? So that's one thing to look at if you do want exposure to a different type of market. So let's have a look over here on the weekly scale, just quickly at every time that the funding went significantly negative over the years, ever since the FTX lows, you put in a big move. USDC.D peg, you put in a big move. Yen cash carry trade, you had slightly negative funding over there, you put in a big move. In other words, short squeezed, right? In other words, you put in a bit of a short squeeze. Negative funding over here again, short squeeze towards the upside. And most recently, we've started to put in a little bit of negative funding once again, which ties into at least the thesis or the narrative that we believe that when the S&P 500 and QQQ break out into all-time highs, you're probably going to see an attempted follow-through from crypto. But again, I said, after this next short squeeze, if it does even take place, because all a game of probabilities, we never actually know with certainty what's going to happen next. If the price does enter into the party zone and you start to mark up towards $125,000, $130,000, there are some key things that you need to be looking at. We've spoken about it before, most notably the white line over there on the MACD and the white line on the RSI, which is going to be your bearish divergence. That would be the potential for triple bearish divergence. 3 drives higher, 3 drives lower on the RSI, triple bearish divergence over there. And you would need that RSI to break this to invalidate that, and price would need to break above 130,000, which is always possible. But we cross that road when we get there. All I'm saying is if you do put in that short squeeze, that's probably where, instead of FOMOing into the market, you actually want to be looking to take profits from the earlier trades that were highlighted at the start of the bull market, right? The other chart that we can look at over here is the 2-week scale, where you have the potential to also confirm bearish divergence on the 2-week time frame between price and the market 𝗙𝗶 indicator with your momentum oscillator rolling over. Now, the prior times that we printed a red dot, we got pretty significant drawdowns in the region of, you can see over here, this is on the 2-week scale, but I'll show you on multiple different time frames. This confirmed the top as well in 2021. So you can see in that instance, a 25% pullback. If we go back in time to the prior times that we had that, you can see the similarities. So 2 drives higher and another drive low over here. You got your top over there on the 2-week scale. And once that red dot came into play, price then at that point in time dropped 53%. And the second red dot that you got over here confirmed the exact candle top. And of course, that took you through the whole bear market, 76% down. And again, let the chart do the talking. You don't need to necessarily, trust me, go back test it, verify it for yourself. But you have the bearish divergence over there on the 2-week scale. Very, very, very similar to what you're seeing on the weekly over here. For Bitcoin, the 2-week will show you the same thing, right? Here's your 2-week scale, RSI coming down, price moving towards the upside over there. And let's just quickly review it on the weekly, which is also showing the same thing. And the weekly already has a confirmed red dot. So if we look at the weekly red dot, this gives you a different drawdown target over here. The last time that we had it, 30% drawdown, 29.7, call it 30%. Here you have your red dot. The red dot on the 2-week has not confirmed. So I have some important things to say about this, which I'll do in a minute. Let's first just have a look at this time frame over here. Same thing, bearish divergence, momentum oscillator rolling over, money flow coming down, price failing to put in higher highs, showing a lack of momentum and price essentially stalling out. And you got your red dot over there, price dropped 50%. And then the second red dot that you got off of the higher high, of course, as you know, took you into the bear market, 77-ish% down. Now, I said I have some important things that I need to say about this because, of course, this can be invalidated. It can very, very easily be invalidated. What I'd be most focused on is the 2-week scale. because the 2-week scale is a very, very powerful chart. And typically when you see consecutive 2-week candles taking the lows out, that is very, very, very significant. And let's just quickly remove some of the noise over here by turning off all of the indicators and all of the drawings. Let's just do it like that. There we go. Wait 1 second. Let's just quickly turn everything off over there. So if you focus on these candles over here, you can see this candle, although it rallied all the way at one point to the top of that section over there, looking like a major breakout, it ended up coming down, closing below the 12th of May candle low on a 2-week scale. The next candle also had a lot of volatility, ran all the way to the top side at $110,000, ran all the way to the downside, taking out that candle low and still closing lower than the prior 2-week candle. So therefore, you have to ask yourself, what is the possibility that this one does something similar? Which is why you want to wait for confirmations or validations before turning bullish. So what I'd be looking at is, at least on the weekly scale, if this weekly candle can start to trade above last week's candle high, which would be pretty close to all-time highs, confirming the breakout, then you would have a much safer entry, and now we'll have the ability to at least invalidate these bearish divergences. Then you could start to get that momentum oscillator breaking that trend line. Very, very similar to the RSI, where if you see this starting to trade through these trend lines, then instead that would position into a sign of strength, and then you can catch a huge momentous move. So those are some of the, it's a much larger time frame consideration, things that you need to be looking at. You know, as long as price holds over here, if you look at the price over here on the weekly scale, this is looking like a bull flag. Big move up, consolidation sideways within the pink box. Basically, it's telling you don't take out last week's low. If you start taking out last week's low, just imagine the candle will look very different, right? If this candle starts to turn red and close down here, imagine what the emotions will be like. This is very different then. Then you're starting to look for a much deeper pullback where, yes, people will be on higher low watch somewhere around here. And then you can see later on if you can continue. So you need to be constantly reevaluating what the market's doing. Essentially, what I'm suggesting on the weekly scales, as long as you can defend that low, which is $98,000, as long as you can hold around there, especially on a closing basis, I'd personally prefer to actually see us close higher. I don't want to close any lower than 100-ish thousand, around that $100,000 mark. The bullish hope is alive, but you cannot ignore these bearish divergences on the high time frame. Unless you don't care about money, right? Then ignore it. If you don't love money, just blindly buy and look the other way and then hope for the best. All right, so we need to tie that into the daily timeframes as well, and then we'll have a look at the super guppy indicator as well as the volumes. Volumes are starting to come back, which is why I say it's really a tricky spot for the market, because it's 50-50 in the sense that the market could easily break to new all-time highs, exactly like the stock market is doing, due to the short squeeze potential. And if that happens, then you can start to breach these levels. So it's a very, very, very tricky environment, because you have price closing back above those key moving averages. That would be the first sign for me that things are going to start to go south towards the downside. If you start to lose that 9 and 18 exponential moving average again, which the 9 and 18 have actually already crossed below the 50 EMA. And if you do cross below those again, if those cross and they start to turn down and that 50 begins to roll over, that's going to be definitely a little bit of a concerning sign, because at that point you have confirmation on the 2-week scale as well, bearish divergence, and then you're probably looking at, you know, those are high time frame signals. All right, so you still haven't crossed above the yellow line. This proves to be time and time again a very, very, very significant area of you know, as a battle line. It's a very significant area, 106,145. We have not changed this level at all. It's been here for months. And, you know, I'm not a fan of triple tops. Why am I not a fan of triple tops? Because the more you test the level, the higher the probability is that you're going to breach that level. So I'm 100% open to that as a scenario. If we can consolidate above the yellow line, good. If you consolidate below the yellow line or reject, bad, right? We took the long trade over here. We spoke about that swing failure pattern, reclaim $100,000. That was the long trade. But we at the area of interest where we said this is where resistance will probably kick in, and that's exactly what it's doing. So we need a little bit more time. If the break does happen, pay close attention to the volume. If you can see the volume spike up with the break, that's a very, very, very strong sign that we're following along with the stock market, and new volume should come into the market. As you can see is happening on the monthly scale, we are getting a little bit of an uptick. You just don't want this to turn over now. You need to see continued strength within the 7-day daily exchange volume rising and rising towards the upside to continue that. By definition, right, the bearish divergences literally tell you that there is momentum that is dying off. The volume is another metric to view. Is there momentum? Is there the lifeblood of the crypto market, which is the volume? So if you have the volume going up, then you would expect that you're gonna at least invalidate these bearish divergences. If these bearish divergences remain present and the volume doesn't come back in, but instead begins to turn over, big warning sign, very big warning sign, right? So a couple of things that I know it's a lot, or multiple different scenarios. It becomes harder and harder the later and later you get into the cycle. I just want to be clear. I covered this with Whale Room. First quarter of the cycle, easiest by far. Second quarter of the cycle, within the cycle, very, very, very easy as well. Third quarter, it begins to get a little bit tricky. Fourth quarter, which is where we're at right now, we're in the fourth and final quarter of this bull run. Very difficult, very, very difficult, because this is where things can go parabolic in a heartbeat. But this is also where, things can be slightly different and earlier, and the cycle can roll over earlier than expected. Now, that's not my base case. My base case is that this cycle ends in, October, November of this year. Between September, October, November of this year, that still remains the base case and ends strong. But things can change, and you need to be prepared for that. So volumes are still low over here, which means we need to pay attention to the next big spike in liquidations. That increases the probability that that's the next directional move that's going to be taking place. So in other words, if you do reject and you start to turn down and the liquidations pick up, that's likely the next move, right? Then you're going in for a major pullback. But if you can short squeeze and you can break above here, that's where FOMO will come back into the market. And that's where things can actually start to go parabolic, like you've previously seen with aggressive moves towards the upside. So we'll keep an eye on this. Hence the thumbnail. What is the thumbnail again? What exactly did we write? It's something like time is running out. And time is running out for both the bulls and the bears. They're going to be looking to make their next major move very, very, very soon. Very, very, very soon, the next major move should take place. And then we're going to find out where we're at. But are we still in a bull market? Absolutely. We're still in a bull market, guys. We're still in a bull market because we have, on the high time frames, prices are still trending higher, very close to all-time highs on Bitcoin specifically, already all-time highs in equities. So therefore, the equity market is still in a bull market. But we have to also look at some of the low time frames, like the 12-hour. And the 12-hour has broken structure. And instead of you taking my word for it, I thought I'll literally put the indicator on the chart that tells you if structure is broken towards the downside. And remember, the low time frame shift first, and then the high time frames begin to shift. And you do have a breakup structure already on the low time frames, as you can see over here. Once you took out that low, that created a lower low, and therefore you're on lower high watch. So where would the most likely place be for rejection if this was going to be the start of a downtrend? Because it's an if, because it's always probabilities. Well, I like to go for the extremes of the move, which is going to be, as we've spoken to you before about this, the 0.786 fib level up to the 0.886. We've taken it from that local high down to the local low. So that was your previous lower high down to the lower low. That is the area of interest, which means Bitcoin could theoretically spike all the way up to about $107,000, $108,000, which would also fulfill some of that wick over there, and it's going to meet the trend line, which is downtrending. And if you reject over there, of course, that could lead price much lower. I think that there will be a lot of dip buys that are looking to step in for high low at that point in time, which is fair enough. You have a defined risk level over there. But if you take out that low, that's where all those bearish divergences come into play and it becomes a real thing. Okay, also, I forgot to mention, of course, we have on here the Super Guppy. Now, remember, the Super Guppy is a conglomerate of different exponential moving averages, which help to keep you in strong trending moves. And you can see how good it is. So, yes, there are periods that chop you out, but mostly when it's green, you're in a powerful, strong trending move. That's when it's easy mode, right? Up only, and it's very easy. You throw your money in anything, and you're going to print. And up only, look at this one, massive up only, up only. And as you can see over here, it started a little bit of a downtrend. And then we had big up only. And now we in that indecision point with a break of structure, which means that this next couple of candles worth of price action trading are going to be vitally important, because we're going to find out, was that just a little bit of a shakeout, and we're going to resume the uptrend, flip the super guppy back green over there to continue that trend towards that $130,000 target, or are we alternatively going to reject over here and start to drop down? All right, let me know in the comments if you are following and what your thoughts are. And we'll continue on over there. We'll have a look as well at Ethereum, right? Very, very, very important. We'll have a look at Ethereum over here, which has already started to turn, or it hasn't turned red yet. It's getting very, very, very close. So similar, Ethereum, 2,700 is going to be the key level, right? 2,700, that's going to be the significant area to reclaim. If ETH can reclaim that, you can start to flip green again. Okay. We should also have a look quickly at the total cryptocurrency market cap using this. And the same thing, right? You have the break of structure. Why is the break of structure important? Because that shows you the trend shift, lower lows and lower highs. The thing is, if you take out this low, well, you're also losing the 200 moving average over there on the total cryptocurrency market cap, which creates multiple series of low lows and lower highs, and that will ultimately flip that red. So you're not in, by all intents and purposes, you're not in a strong downtrend. You're in this choppy market. You're in a choppy market. It's still choppy, but the next move is going to decide, is it flipping the trends back up strong where it's easy mode, or are we actually going into full-on distribution towards the downside? Total 2, you can see, is already beginning to turn red. Total 3 is already turned red. It's already below that 200 and rolling over. If you look at others are already below the 200 moving average. The blue one, you got the break of structure, you got lower lows and lower highs. So you don't want to counter that trend, right? It's very, very important. You don't want to counter that trend. Now, there are coins that are strong. One, for example, that remains strong in terms of its super guppy is Hype. If you look at Hype over there, that's pretty strong. There it is. Hype is still, it's had a powerful, powerful move towards the upside. Green shook out a little bit, came towards the downside. Now it needs to hold this and probably consolidate for a little bit longer. And then you get prices moving higher. But to make a lot of money in the market, all you need to do is wait for these trends to get established. And then you get into that trend, and when it's green and you catch a powerful move, you make a lot of money, and then you can jump out. All right, some of you say, how is Say? Let's actually have a look at Say. Before we go to Say, let's go through just the other layer ones in terms of those trends. You can see the downsloping trend line, XRP, turned red, below the 200 moving average. These are significant areas to get above. Does it have a break of structure? Yes, it does. Lower lows and lower highs. It needs to buck that trend. Solana, same thing. You can see the yellow downtrend over there, below the 200 moving average. Super guppy has turned red. It has a break of structure, which means that this could be the start of a downtrend for Solana. You need to be careful. Look at Sui, which was also once the darling child of the crypto market. Downtrend with the yellow line, below the 200 moving average, break of structure over there, which means you need to be on lower high watch. You need to be careful. We have, of course, Sonic, previously called Phantom, already been in a downtrend for quite a while over here. Multiple break of structures, break of structure, break of structure, break of structure, which means it's just continuing that downtrend. You did break the yellow line, so it has an opportunity to flip this from red into gray if it can just consolidate for a little bit longer over there. All right, we covered Hype. Let's go to Casper quickly. Same thing. Downtrend over there. I saw Casper's trending on Twitter today for some reason. I'm not exactly sure why. Let me know in the comments if you guys know why. But downtrend, it's in a downtrend on the 12-hour time frame. Cardano in a downtrend on the 12-hour time frame. Of course, you can throw a trend line in there. It's going to be the same thing. And then you guys said Say, which has had some recent strength. But let's see, how strong is Say actually? Is it very strong? Well, that's a decent move, right? That's enough to end that downtrend. There's your change of character. Pullbacks, basically, if it does hold this. So, of course, you're never going to buy up here. There's absolutely no way. Watch for any sort of a throwback, which will create a little bit of a high low. Main levels that I'll be looking at, let's just quickly mark off on the daily. Let me just get a bit more perspective. And then let's throw Say back in on the list because we previously removed it as one of the weaker coins. So let's go put Say next to Sui over there. We'll keep that on the list and just check out some of these levels. I'm going to very quickly just remove the indicators so it's not too confusing, and we can mark out some key levels. So this is clearly a range high breakout level. That's pretty significant. I'm not convinced that you're going to hold this because it has been a pretty impulsive big move. So I'd probably target somewhere around the mid-range. So mid-range, we're going to mark it out now. Okay, let's just chuck that, and it's going to bring our indicator possibly back. Let's go. There we go. 0.5. All right, so this would be more or less the area of interest that I'm targeting. I'm going to remove that. Okay, so for say, I think pullbacks down into about 22.79. 22.79, that has the chance to flip the super guppy back up. So you're looking for something like this. Let's just draw it on the chart, go back onto the 12-hour. Okay, back onto the 12-hour. For say, you're looking for a little bit of a pullback. You can see it's already turning green over there, which is good. So pullbacks, down into this region, consolidate a little bit. That will start to get that super guppy turning green once again. Okay, cool. Let's go have a look at some of the others just using these. Let's see one of the strongest memes, 𝗵𝗴, and it's down, right? Red. Break of structures, come towards the downside. SPX 6900, still holding up, bouncing off of the 200 moving average over there, flipping gray. So you basically need to consolidate with at least a higher low and then attempt to get that trend back towards the upside. Otherwise, any low highs over here, if you take out these lows, essentially it is going to turn red. For those of you that are actively trading, or even if you're not actively trading, I am going to give you a trade opportunity today, now on the show. And I'll show you why it's a relevant trade. We've seen a hit rate 4 weeks in a row on this. So will we get the fifth? I don't know, right? I don't make the rules. But if it plays out like the last 4 weeks, you have a great trade opportunity for today. But for those of you that are actively trading, make sure that you jump into my team over here, right? This just opened today. It's the 𝗨𝗚𝗚𝗚, right? 𝗨𝗚𝗚𝗚𝗚, $4.2 million prize pool, and you can win a Cybertruck, Tesla Cybertruck over here. This is on Blowfin, which is probably my favorite non-KYC exchange in the entire world. It's absolutely incredible. So it just started, just started. The link is in the description below. Go over there. You get your sign-up bonus as well. If you use that link to join, there is a sign-up bonus. You can win a Mega Watch Cybertruck, $4.2 million. Massive prize offers over there. And it's for the first few that can join into that team. So join into my team. That's the link, right? That is the link to join my team. Let's just double check. It is, did they change the link? I feel like they changed the link. There should be a link there as well for my team, but we'll double check. Okay, continuing on. Now, what is the trade and what is the pattern that we've seen 5 weeks or 4 weeks in a row? It's the Monday high, the Monday range trading strategy. If you look at this on Bitcoin, this is unbelievable. Swept the high, marked down. Swept the high, marked down. Swept the high, marked down. Swept the high over there and marked down. So, well, this hasn't swept the high yet, at least in this image. But this was obviously a screenshot from, I think it was yesterday. As of today, we've swept the high. So is there an opportunity over here for a short trade? Well, that's what the results look like. Average returns by day. Monday seems to be putting in the major high. And then you start to put in a little bit of a pullback on Tuesday, Wednesday. And then the strongest markdown day is Thursday, which is basically where you'd want to be taking your profits on that short trade. So you have some confluence coming into play over here. If we just quickly go into the 4-hour time frame, I know this is a little bit messy, so just bear with me. But because we have a lot of things or lines going on the chart over here, maybe we should just remove that one to not confuse you. But what do you have over here, right? Well, firstly, let's go into the daily time frame. So if we go into the daily time frame, just for a bit of perspective, you have over here essentially your high, your low, your lower high, your lower low, and then we have the main area of interest where rejection would take place. I'm not convinced that we're going to get that high, but we'll see. If you do get that high, you can start to probably scale into some short trades. And if price does deviate back into the Monday high range trade over here, then you have, of course, a better trade on your hand. But what I wanted to highlight is the range high, the mid-range, and then you have the range low. So what you'll notice is if I zoom in and I go in the 5-minute time frame, the Monday high is confluence with the mid-range. It lines up almost perfectly. So there it is. Here's your Monday high, which is still uptrending. You want this trend to end. It hasn't ended. You're still putting in higher highs and high lows with price grinding higher. But if you start to see that trend shift and you lose the mid-range, which is going to be this, we'll change the color over here for you. We'll put in yellow. If you lose that yellow line and you break below the Monday high, that's going to be a compelling sign. So you're looking for something like that. You need to break structure, set in a lower high off of that next lower high over there, you could theoretically enter a short trade with your stops above wherever the local high is set. Again, guys, you need to wait for price action to unfold. I don't know if you're going to spike up first and then come down, but if you get that deviation, it has been, 4 weeks in a row. 4 weeks in a row. This is what happened to Bitcoin. Down, 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 down. So you get those intra-week movements, which provide wonderful trade opportunities. And then you're looking to take your profits along the way, Monday mid-range, and then after that, down to the Monday low. So the deviation, if it does play out, you're looking for something like that. Now, you need to use a little bit of context, because if the stock market goes parabolic with a short squeeze, in terms of hedge funds that are positioned off sides and may start to chase the pump. By the way, guys, hedge funds are not great traders. Most of them don't outperform the stock market. So just so you know that. So just because they position short doesn't mean that you should be. So monitor this. So you got a little bit of a trend line over here. I'd keep an eye on that. There you go. Got a bit of a trend over there. If you can start to sweep this, that's a lot of liquidity for the taking. So if price starts to fall down, all of this is liquidity, liquidity, liquidity. And of course, a lot of inefficiency as well over here, which takes you at least down to the mid-range. So that's your first trade opportunity over there for the World Series of Trading competition. Now, we've looked a lot at the USDT dominance, which has been really important in terms of building a bit of a bias. And we said that for the bullish hope to be alive, we need to see this drop down all the way, possibly even as low as 3.29%. We need to see a big move. Keep in mind, it's all about trend. Theoretically, this is still in the uptrend, which is why when we looked at the super guppy now, most of the things are putting in lower lows and lower highs, because in the shorter term, this is still putting in higher highs and higher lows. So you need to start to break below that yellow line. That's still the major level to watch. 4.5%. If you can take out that level, that's where, we enter into what I call it over here, the party zone. That's where we enter into the party zone for Bitcoin, and things start to look good, and you take out last week's high. The implications of not taking out last week's high means the bearish divergences are still alive. And more importantly, if you take out last week's low, then it starts to get bad very, very, very quickly. So again, I don't control the market, guys. We're just reacting to key levels at each point in time. All right, so there it is. We already planned this. This happened. We covered that yesterday into the fair value gap, hopium zone, where it rejected, and it did. So what does it mean for altcoins? Well, this is an interesting chart from Marty Party. He says people begging for altcoin season. Take note. Every June seems to be the bottom for altcoins, and he showed he has total 3. Every June is the low. So there was June 2020. That was a major low. You started to grind up. And then, of course, you led into the bull run. You went absolutely crazy. You'd need to see a breakdown in Bitcoin dominance as well. Now, is it possible that Bitcoin could have those bearish divergences and actually, slowly sell off while altcoins run? It is possible if the cycle is tracking most similarly to 2017. That's what I want to be clear about. In 2021, that didn't happen. When Bitcoin topped, altcoins topped. Right? It was when it was over for Bitcoin, it was over for everything. But if you look at 2017, actually what happened was once Bitcoin topped, for 3 weeks, you had this massive, massive altcoin run. So food for thought. Anyway, going back to the tweet over here, you can see even in June where you had that dip over there, 2021, that did mark a major low. It was a little bit after. It was probably around the end of June that was actually put in that low. And then you had a big bounce and rally towards the upside. June 2022, even for the little bear market relief rally over there, altcoins did run. June 2023, I think that's a little bit of a nothing burger on that one. July 2024, of course, you said in a major low and had a big move up. So maybe we'll start to see the pendulum swing in the short term in favor of altcoins. Look, ETH, big drop towards the downside, coming into a key resistance. It's always difficult to reclaim that order block. That's a significant area. So I think that it's best to wait for the trends to be reestablished over here and not to chase the pump. We gave some of the long trades already. We spoke about the fair value gaps getting refilled. We spoke about Bitcoin sweeping 100,000 and reclaiming. Now I wouldn't really be jumping into longs. I'd be waiting for those high time frame trends and the super guppy to begin to flip again. Okay, so we can have a look at a couple of things. Let me know if you have any requests. Also, it's so funny. This comment is exactly the feeling the feeling of the cycle. It's been hard. I agree. I definitely resonate with you. This is how the cycle has been, right? It has been difficult, and it's because of this. It's just Bitcoin. Bitcoin is just rallying because of of course, institutional interest in Bitcoin only. But remember that they do have an ETF as well for ETH. So maybe they also start to do a little bit of a rotational game or increase their buying on ETH. And that could start to bring some optimism. But the most important thing is we have to see that increase in volume. Very, very, very important. Okay. And then that volume increase will start to invalidate, which is what I'd want. I want this to be invalidated. I would love for this bearish divergence to be invalidated. I don't want to be bearish. I would much, much rather be bullish. Life is easier. Everyone's happier. We all make more money. It's just better all around where things go up. But yeah, you can't ignore this. At least I can't ignore this. The good thing on this is that this is on the weekly scale. Your money flow, which is the green line, is still moving towards the upside. So at least that's in the correct direction, which is why I say that, you could do that and then break this. But if this starts to roll over, if the green line begins to roll over like that, then it becomes bad. And the yellow, which is your VWAP, also starts to turn down. Anyway, in terms of altcoins, I highlighted to you guys before the Open GPU protocol, which is amazing. You can see over here, low market cap. This is like a hidden gem. If there is going to be that alt season and 𝗏𝗏𝗏𝗏 is correct, that alts tend to find a bottom over June, July. Well, just to let you know, they have actually launched. They have all their providers. These are all providers that are actually using the platform. You can see, for any of you can do this. There's a link in the description below. Currently, transactions are at near an all-time high, 276,000 transactions, right? So on-chain transactions are there, dozens of providers in just a week's worth of activity over there, and you can register. So if you do want to participate with Open GPU, you complete little tasks over there. So if you're on the platform and you do connect, you connect to their system over here, you complete little tasks. They'll have a task section where you can get started, go over there, get started, complete tasks, and basically you can earn money over there basically for just completing it. It's only listed so far on MEXC, Uniswap, Gate, and KSEC. So I think when this starts to get to other exchanges, this will pick up, and they're doing some real world things over there, which is amazing. All right, let me know in the comments if there is anything else that you want to have a look at. I'm just quickly waiting for the feed to come through over there. What else? All right, Fartcoin. Sure, we can have a look at Fartcoin. What else? Let me know a couple more. We'll quickly run through some of those. Okay, Fartcoin, that's one. Dog, Ondo. Sure, let's have a look at those. Dog, Ondo. Wait, what about this one? Pinex trade still active? Yes, they are. Let's quickly actually throw that in view for you. So they've been scaling into the positions. There it is. Still scaling in. So some of the positions are slightly down. Some of them are in profit because it's busy filling the orders right now. Remember, what I want to be clear with is this is within my risk, right? This portfolio is within my risk. I can afford to, I know that might annoy some people, but I can afford to blow this account. So please calculate your own risk, right? Please calculate your own risk when it comes to taking those trades. Like, if 50K is not within your risk parameters and you try to copy me at 50K, you need to take profits at some point. I think this account we started with like 40 or something. So it's been moving along steadily over here, and we'll see if we can get another big move. But yeah, I'm not really going to change anything. I'm just letting this one be and holding those positions. Okay, so let's go to some of the other coins over there. We said the one was Ondo. Let's see how Ondo's doing. Well, Ondo obviously coming down into very, very, very key support. I'll probably put this next to, there we go. Let's just put these charts next to each other. There we go. Let's have a look. So, and then we also have to look at Fartcoin. So Ondo, there's Ondo. Of course, we showed this already. Downtrend, break of structure, low lows, lower highs. But yes, it is coming into key support. This is going to be a massive demand area. Look, you've already lost that trend line, which is not a good sign, which means it could bleed down further quicker. So you need to be prepared that Ondo could come. You would hope that that's going to be the major low and that you start to recover from this point, because if you take out that low from current price, that means a move all the way back down to the bottom, which would look, like that, 30%, which is pretty brutal. The other one that you wanted was 𝗙𝗏𝗏𝗏. So let's quickly have a look at 𝗙𝗏𝗏𝗏. I think 𝗙𝗏𝗏𝗏 is a good one to look at as a leading chart or leading indicator, because it seems it has been moving. I think it dumped before the rest of the market, also pumped before the rest of the market. So it seems to be a little bit of a leading chart to look at. You have this uptrend which did hold up on a closing basis. It defended that, but if it rolls over, because this is going to be on the super guppy, you'll see over here, this is going to be in a downtrend. So there's 𝗙𝗏𝗏𝗏. There it is. It's turned red, which means it's a lot of work and effort to, to try and buck that trend. If you're starting to put it in low lows and low highs, you've broken structure. If it rolls over again underneath the 200 moving average, then these become key areas to look at. Okay, 73 cents. Key SR flip region. Key SR flip, very important zone. Aptos, yeah, we can have a look at Aptos. I think I took it off the list because it looks so bad, but we'll put it on for now quickly. I should just create the bad section for this, and then we can always keep it over there underneath at the bottom. Let's just get another one from a different exchange. USDT. Let's go to maybe we'll go. Wait, Aptos. Okay, let's just put APT USDT. This one should be good. Binance. All right, so Aptos, there it is, right? That's what I said. It looks terrible. It's taken out that low. Very, very, very bad. We need to clean some of these things up. So yeah, it's just all these coins are just oscillating. You are at the bottom of the range, so if you can start to reclaim, great. But is there a powerful trend intact? Of course not. If you go over here, this is a powerful downtrend that's intact. There's no uptrend intact. Okay, there is no uptrend intact over here. So you're at least, if you want to catch a trending move as a swing trader, you need to reestablish that uptrend. And you can see it did work out nicely previously. Those are your uptrends. And when it turns red, there's your downtrend. Big moves up, big moves down. Okay, it's very, very, very important, because I think in the next, week to two, we're really going to know the predominant direction that crypto is choosing. So I think it's a very, very important time to pay attention, as difficult as that may be for a lot of you, because when things are boring, it's hard to pay attention. But that's, I found, the most important time to be paying attention. All right. What else have we got over here, guys? 𝗙𝗶𝗴𝗵𝗁. Well, I think we've covered Solana. We'll go back to it. We'll go back to Solana over here. Let's go on this chart. So Solana is just chopping about. I have to view this as the main key area, 120. If if it can't put in a significant high low over here, then eventually I think it's going to revisit this 120. 𝗬𝗎. Remember that in terms of the bullish case, you really want to see some confirmations, which I'll bring into view over here. Let's just quickly throw a 𝗟𝗏𝗏 into your view over here, and let's just go back to some of these things that I mentioned before. So if it's going to be bullish, you want this to confirm urgently, which is why you'll be praying for a short squeeze. You should be praying, if you're bullish and maybe you're down in the market, you should be praying that the stock market squeezes to new all-time highs and crypto follows suit, and there's some sort of massive rotation out of Bitcoin into altcoins, because you need this number 2 to confirm, right? So Elliott wave 4 to 5 is the orange count, the orange line. And now we have the substructure, which is 1 down to 2. If you start to take out those lows that we've recently put in, it becomes troublesome. So it's really, really important that you see the bulls defend that level. The thing that concerns me is that we're also going to be going into, of course, where is it? Here we go. We're going to be going into very, very, very soon the dreaded bear moon. Oh, we have it. We have the dreaded bear moon. It has arrived. I didn't realize that it had arrived. It has arrived. The dreaded bear moon has arrived right at resistance over there, which is, I guess, all the more reason to take these things very seriously. And look, did the bull moon fail? Of course, it didn't really pump price. If anything, price went towards the downside. Usually, what I find with these moons is when it does the opposite of what you expect, that can often indicate a shift in the trend. where if we look at the 𝗬𝗀𝗙𝗊 I just showed you, of course, broke down. Now, of course, it's never going to work 100% of the time, right? But you did create a lower low. So if you created a lower low within the bull moon phase, all the previous bull moons did very well, right? You had your previous bull moon, up, previous bull moon, up, previous bull moon, still put in a little bit of an upside move within a downtrend. So I take the moon that supports the trend much more seriously. What I mean by that is, if you've now broken structure below the yellow line and created a lower low, and you're coming into an area where we'd expect that price could be rejective coming into this key zone, possibly squeezing up to about even $107,000, $108,000, which is resistance over here, then with a bear moon, that has the potential to break price down into a new low. So it would make me, if I was bullish and I saw a bear moon when the trend started to shift towards the downside at the key point where you would see a lower high, then I take that seriously, right? Then I'd be less inclined to ape into a position. If I see a bull moon when the trend is towards the upside and you've ended a downtrend, then I take those seriously, and I'm more willing to look for long trades, right? So therefore, I'm more willing to look for short trades, because this is where we're at, right? You guys say, yes, last bull moon invalidated, but of course, one of them is going to invalidate when the trend shifts, but still has something like 70-80% hit rate. You can do the work for yourself. Have a look over here. Bull moon, price goes up. Bear moon, price goes down. And of course, then you rip through that. Bull moon sends price up. Bear moon just consolidates. So in a trending move, if it's an uptrend, the bull moon will be extra powerful. The bear moon will just consolidate price or create short-term pullbacks. If it is in a downtrend, then the bull moon will create small little pullbacks or consolidations, and the bear moon should continue the trend towards the downside. That's the way that I view it. All right. Now, it's not the be all and end all. This is just an extra thing to put in your toolkit for, trend confluence. You still do have the moving average support, so I don't want to deny that. That's why I just said, if you begin to lose these moving averages again, then it becomes a little bit more troublesome. And in fact, I think that even if price does reject over here, I think that most of the market is going to be looking for long trades into a higher low. But then if you take out those lows, then of course the panic will ensue. Can this bear moon invalidate? Yes, absolutely. Of course it can invalidate. It can definitely invalidate. It's, is it possible that something can invalidate or fail? Yes. But is it probable that it's going to fail back to back? Maybe not. ENA, how's your trade in Pinex? We can have a look. Let's see quickly, where's ENA? And how many has it filled? ENA, where is ENA? ENA over here. Okay, there we go. So ENA still has more to fill. It came and it took most of them, but it has like 2 more grids to fill on ENA. So it just missed narrowly 22 cents. And then the next one under that is just under 21 cents. All right. Okay, guys. So yeah, that's what we're looking at. I think very important time in the market. Pay attention, focus. Go vote as well in the poll. If you haven't already voted, where's our little poll over here? Let's go back to the poll. 2,000 of you have voted, which is amazing. That's a lot of you. How many people do we have live right now? 2,000. So it's literally only 224 of you have not voted. So go vote over there. Is the worst over? 53% of you believe it is. 43% say no. And the others, 4% of you are letting me know in the comments. So let me know in the comments over there. All right. And then again, join the competition. Oh, there it is. It's back. Team Kyle. It's now back. You guys changed it again. So join Team Kyle if you want to join Team Kyle for the Blowfin competition. There it is. $4.3 million up for grabs. Tesla Cybertruck, Omega watches, amazing prize opportunities, exclusive, of course, only for you guys. So that's it from me, folks. I'll see you all on the next one. I hope you have a wonderful day, and cheers for now.